name is Brantley Charles, and I work with Ebby Holiday Realtors with the Wanda Charles Group. And I'm actually out today at one of our listings, 2408 Silverstone Lane, and it's actually in McKinney ISD, under 400 with a pool. So it's a great buy. I'll link some photos in the description so you guys can take a look. But I'm actually out here with Blake Robertson right now. He's one of our preferred loan officers. And Blake, if you want to go ahead and introduce yourself, that'd be awesome.
Thank you, Brantley. Blake Robertson, Nortex Mortgage. Nortex Mortgage is a independent family company that's been doing mortgages here in North Texas for just over 20 years. We specialize in all your basic residential mortgages, conventional, FHA, VA, USDA, which I think we're going to go into a little bit more detail here in a little bit. Thanks for having me again.
No problem. And so some of our questions that we really get, we have 5 main questions that we get a lot from our buyers. So one of those questions really is, Blake, what's the difference between, I guess, the 3 different types of mains of loans that we have? What are kind of those loans? Name them, please, and then go over some of just the big details of those.
So, like I mentioned a little bit earlier, we have conventional, FHA, and VA are kind of the most popular loans that we do. Start out with conventional. Conventional are the loans that are eventually that have to be saleable to Freddie and Fannie on the secondary market. You have different down payments of 3% for first-time home buyers, 5%, 10%, 15%. Those all have what's called PMI, private mortgage insurance, which some of you all might know about or have heard. But then you have 20% and higher, which don't have PMI.
Gotcha.
Then you have your government loans in FHA and VA. With FHA, you have your minimum down payment of 3.5%. And you have what's called MIP, mortgage insurance premium. It's kind of like the PMI of the conventional loan, but it's called a little bit different for FHA. That is with the life of the loan, so that's a little bit different than, you go 20% with conventional, it goes away, but with FHA it's with the life of the loan.
And this is kind of a question that I'm going to actually add. When you actually see buyers and realtors kind of working together, as of course with you as well, which offers usually tend to actually be the most prominent and actually get accepted the quickest and are easiest to work with?
Sure. So usually, the answer straight up, it would be conventional. That's just because there's a perception with the appraisal process when you get an appraisal on a conventional loan versus an appraisal on an FHA loan. FHA loans, there's a couple more things to it that might make it a little bit more difficult as far as appraising, and maybe some more requirements that need to be done after the appraisal. So because of that, conventional is usually the preferred loan as far as when a seller has multiple offers, they choose a conventional over an FHA.
Gotcha. And so between those 3 different loans, what is kind of the minimum down payments? Of course, VA, is really only for veterans. Of course, people who have been in the military. And so what are the minimum down payments of those 3 main loans?
So conventional, first-time home buyers, you can go 3% down as a minimum. If you're not a first-time home buyer, which a first-time home buyer is considered anyone that has not owned a home in the last 3 years.
Gotcha.
So if you've never owned a home, or maybe you sold your home 4 or 5 years ago and you've been renting, you're considered a first-time home buyer. If you aren't a first-time home buyer, minimum down is 5%. FHA, minimum down is 3.5%. And then VA, like you said, for veterans, is 0% down. And usually VAs for the veterans out there have a little bit of trouble of maybe getting an offer accepted in multiple offer situations, but that doesn't mean that they are lesser quality of loans. These are usually pretty solid loans as far as from the lender's perspective.
Gotcha. Okay. And then, so how does one actually kind of get a rate? Is it something that I can actually Google online and just find a rate and be like, hey, this is what my lender is going to be able to get me? Or do I really need to go and speak to someone, speak to a specialist like yourself, and actually get a rate?
So the rates, when you go online, you Google rates, those are the rates for usually the top tier, maybe 15-year note, and aren't really true to, in most cases, to what you'd be really getting. So because your rate depends on a few different factors: your credit score, your down payment, and the loan type that you go with. And so it takes meeting with a loan officer, them going through your financials, asking you financial questions, and getting your story. And that's the best way to figure out what kind of rate suits you. And you can actually play with rates different ways, and you can get maybe some lender credits to help you pay for closing. And we can go into more detail maybe sometime later. But
okay, perfect. And then, so one of the other things that is probably really prominent in a lot of my clients is actually the difference between a commission-based job and actually just a W-2. Usually tends to be a lot more paperwork with a commission-based job. What's some of the things that, if you are commission-based, that you're going to need in order to actually get a loan?
So with any loan, we're going to need to show 2 years of employment history.
Okay.
So whether that be 2 years of W-2s, if you're a W-2 employee, like you said, commission, we're going to show 2 years of receiving a commission. Gotcha. So usually we see that on tax returns. So if you're a commission employee, make sure you have your 2 years tax returns available. Also looking at pay stubs, we can look at year-to-date commission and factor that in as well. So just making sure all of your tax returns and pay stubs and your W-2s, having that all readily available will make life easier for you and your loan officer and figuring out what exactly you qualify for.
Great. So one of our questions would be credit hits. If I'm shopping rates and I'm going and looking at one loan officer versus another, is each time I apply, am I going to get hit each time, or is there a window of time where it's kind of unlimited in the sense?
Right, good question. So that's whenever I'm talking to someone and I'm like, let's pull your credit, see where your credit's at. A lot of the time we're like, no, I don't want an inquiry on my credit report. I don't want my credit report to take a hit, or I already had my credit pulled at another bank and I don't want to get another inquiry. So when you're out shopping for a home, you actually have a 30-day grace period of getting virtually any amount of credit hits or inquiries on your credit report without it hitting. So all those inquiries would count as one hit on your credit report. So you can go from bank to bank, getting quote to quote. I actually advise people, shop around, make sure you are getting the best deal, the best rate. Have them pull your credit and make sure that you're getting true numbers. If you do that within 30 days, that's considered shopping around, shopping for your mortgage. You're not going to be hit multiple times for getting your credit pulled. It's only going to count as one time.
Awesome. All right, is there any other questions that you have that you tend to get from a lot of your clients at all that you want to kind of throw out there?
It depends. Each family that are looking to buy a home, their story is completely different. There's never a cookie cutter answer to every single question, just depending on their financial situation. So I do urge someone when they're just starting out, they talk to their realtor, they talk to their lender, they figure out what they qualify for, get pre-approved, and that way you're walking around when you're looking at homes with the money already in your pocket. You don't have to guess. It's kind of, in a sense, walking around with the money in your pocket. So when you do find that house you love, you're ready to go. You're not scrambling to get pre-approved. You're not just finding out you have this on your credit report or we can't count this income. You're just more prepared, and it just makes the whole process a lot easier.
Gotcha. Awesome. Alrighty, guys. Well, again, my name is Brantley Charles. I work at the Warner Charles Group at Ebby Holiday, and thanks for tuning in our episode. And Blake, I appreciate you for having us.
Hey, thanks for having me.